it's only a matter of time before we see the entire collapse of the system and the collapse of fiat. So
I think
break that down for us. Break down how we get to that breakdown.
Yeah, sure. I think that's generally right, and it is rather sad, but we didn't do it. We didn't, we're not the central banks, and we didn't set up the system. And it may not be a terrible collapse. It might be a reset, which we discussed earlier. But I think what's happened is we've reached kind of peak debt and peak money printing as a solution to our problems. In the early days, growing debt and printing money allowed for additional growth, and there was some inflation, but you could get by. And we've now reached that point in time at which the supply, the growth in the money supply has almost gone vertical. And there's a chart that will be posted with this interview about the M2 chart. And it just shows how, as an example, in the GFC, we printed $3 trillion plus, and it took 3 or 4 years to do it. I mean, now we printed $3 trillion plus, and we did it in 3 months. And, that's an accelerating rate of growth. And so I would suggest that because that second derivative is going up so quickly, the next one's going to cost $10 trillion and then larger and larger and larger. And this is how inflations, which could become hyperinflation, get started. And so it's terribly unfortunate. It's going to be very painful, I think, for a lot of people. That's the bad news. There is actually a silver lining here and good news, and that is the system that's broken needs to be reset. And so I think that these things will drive a reset, and I think a reset will lead to a return to sound money, and I think that will be a better system. So it's not all bad news.
All right. Well, firstly, when you say sound money,
yes,
you mentioned that is the most important contested moral issue of our lifetime. Explain what you mean by that.
I believe it is, and perhaps I'm old-fashioned, but I think that the world did extremely well on a gold standard throughout the 1800s and early 1900s. And we even had a semi-gold standard here, although it was at a national level or at the sovereign level until 1971 when Nixon broke it. And sound money allows people to plan savings and get a return on their capital. Unsound money is I think, a system that allows people who run the system to benefit at the expense of others. It's called the cotillion effect. They get the money first, they borrow cheaply, and that additional money, printing money to pay for things basically is a form of diluting the money stock, and the people who get the money first are able to benefit, and everyone else suffers with higher inflation. So it is a moral issue.
So what is sound money? Is that money backed by gold? Is that the only version of sound money?
There's several forms. There's a competing form now we're going to discuss. But yes, historically, sound money has always been gold because it's the best stock-to-flow ratio asset, and it's universally recognized, and so on and so forth. And so 5,000 years of history says that the best form of sound money is and has been gold, and probably will continue to some degree to be gold. There is a competing standard, which everyone's now aware of, and that is that Bitcoin specifically, and I exclude all the other cryptocurrencies, but Bitcoin specifically is a technological form of sound money, which is an immutable ledger, which I believe is as sound, or could be ultimately be sounder than gold. It's in the process of being adopted, which has positives and negatives associated with it, but it's come on the scene and become a real contender. And I think could end up being, the winner in a very long time frame. In the shorter time frame, I think they're both going to win. And so I've invested in both.
Is it an opportunity in the face of market turbulence for stocks? Gold prices have been hovering around 10-week highs. Silver prices are up slightly this morning, but also have been eyed recently as stocks trade so volatilely. Joining me right now is the author of Rich Dad, Poor Dad, and Rich Global LLC founder, Robert Kiyosaki. Robert, it's great to see you again. Thank you so much for being here this morning. Give us the bull case on silver right now.
Well, first of all, thank you, Maria. The reason I love silver and gold is because, especially today, I don't trust the Fed, I don't trust Treasury, and I definitely don't trust Biden. So those are my big reasons. I've also been saving silver since 1964 when I was in junior high, because I saw the copper tinge coming around our silver coins. And then I started accumulating gold in 1972 after Nixon took the dollar off the gold standard. So I'm a hardcore precious metals guy. And the biggest reason for silver today is two reasons. I put silver in the same category as copper. So it's silver, copper, because they're industrial. They're used in industry. Plus silver is still 50% lower than its all-time high. Actually 100%. I remember when silver was $50 an ounce when the Hunt brothers were trying to corner the market. So I remember silver at $50 and today's at 25, and gold is pushing past 2,000, and Biden's going to print more money. I mean, what else do you want?
Yeah, I mean, what do you make of this Federal Reserve experiment here? The markets have been obviously so nervous about the Fed going from the easing standpoint that it was at to a tightening policy. What do you think we'll hear today when we hear from the Fed? And what about the stock market in the face of this massive change in policy?
Well, I'm concerned because being a baby boomer, we're the first generation with this thing called a 401k. And, you know, if the stock market crashes, baby boomers cannot retire. It's never been like this before. But also, again, I just don't trust this guy Biden. I mean, how can he shut down the Keystone Pipeline? How can he be pushing for inflation? And how can he be, you know, I mean, he's the weakest president we've ever had. So if there is not a better case for gold, silver, or Bitcoin, it's just look at our leadership. And that's really what I look at. Again, I've been collecting silver since 1964, so I'm pretty hardcore, and 72 for gold. I remember I bought gold at $50 an ounce and silver at less than $1 an ounce. And today silver is about 25, and I remember it was 50. So I'm just looking at history, and I look at this incompetence running our Treasury and our Fed, and they've never gotten anything right. They're going to tighten when they shouldn't tighten.
Yep. The decisions that have been made have obviously been incredibly questionable. We've got crises blowing up across the country. Robert, what's a better hedge against inflation, silver or gold?
I actually like silver. Again, let me give you the reasons, because the price of silver. I remember when silver was $50 an ounce, and today it's about 25 an ounce. And I remember when gold was $50 an ounce, and today it's about 1,800. So silver has the biggest move, plus silver is going to be used in electronic vehicles. So that's why I put silver and copper in one category and Bitcoin and gold in another category. So I love silver right now.
Do you expect that we are going to see moves in these commodities as the Federal Reserve raises rates this year, Robert? How many rate hikes are you expecting?
That's beyond my pay scale. You know, I'm a simple man here. I was a Marine in Vietnam. We don't think that much. But I've been always just collecting silver, and I save gold. You know, gold is for saving, and silver is for spending. So I have enough silver stashed in different parts in safe areas, because I don't expect the U.S. dollar to do well. I expect we're going to have hyperinflation.